Hey guys, welcome back on the channel. So in this video, we're going to take a look at Aerodrome. I think it's a really good point in time to buy a bag if you haven't. Not financial advice, but I've been talking about Aerodrome since they launched actually. So I've been able to make it a really good run with this one. And right now, it's just the same thing as with Bitcoin. People look at the price and think, okay, I missed it. You didn't really miss it. You have to have long-term mentality. And with Aerodrome, that's a great opportunity. And I wouldn't even worry about the price dipping to over $1. If that's the case, it's actually sales time for Aerodrome in my opinion. So the price has not been moving all that much. We can see here, this is 4-hour candle chart. And if we go back since the beginning of the year, or let's go even back to December, but this will give you an understanding of yield farming with the high ranges, wide ranges, 87% overall, let's call it 90% range, would have managed us to catch all of this volume. And one of the biggest issues when yield farming is that people go in with very tight ranges. I did that same mistake myself in the beginning, but once I adjusted and I started playing it the long run, because I was already playing the long run. I was buying tokens and holding them in my wallet, and essentially I was yield farming stuff for the short term, but that would not work when there was events such as this. So you see this dip that it experienced from December down to April. That's 4 months of prices just going down. Yeah, here and there it will rally up, but then it takes another hit and then it rallies, it takes a hit. In the long run, it did go down, but in the longer run, it did the exact opposite. So essentially, guys, what we're looking at here is at a potential opportunity for compounding on the way down, even if you bought in at a peak. You can compound all the way down. Yeah, it's not going to be for everyone. You're going to look at charts when you are managing your ranges and compounding and thinking, okay, am I doing the right thing? But when it works, and for it to work, you need to have conviction. I have a lot of conviction on Aerodrome. I've been making videos about it since they launched, when they were at cents of a token and people were just farming and dumping Aero token in the markets. So picture this, if you compound all the way down, it doesn't really need too much when the price starts to rally for you to break even or even start to be at a profit. Because what happens is that when you compound, you lower your entry. I do not know if you have been in crypto since the rage of miners and ROI dApps, but essentially this is how you could play a miner. The thing is that miners are not the best places for you to yield farm because they're extremely risky. There's no real utility to it. It's just a bunch of people trying to front run each other. While here with Aero or some other token, any token that has strong fundamentals, strong utility, you can actually play it the long run, and eventually when the tides turn and the price starts to go on an uptrend, which is the case since April, we saw this to go up at current price at over 300%, around 370. And if we go back to August, it was actually at almost 500%. At this point in time, if you want to take profits and sell your whole bag, you can go ahead and do that. Or even before, I mean, back here in July or even June, we were still 250% up from this downtrend. The thing is that, yeah, we can look at charts and think it's a good entry or not, but when we go and provide liquidity in the long run, it's much easier for us to catch these market movements. Even if you're not planning to sell or buy, it's much easier for us to catch all of this. And let's say, for example, we bought in at this peak, right? At $2. We FOMO'd in and then we saw the price going down. That's when people start to panic and sell if they do not have conviction. On the other hand, if you do have conviction, here later on, 4 months after, when the price touches 30 cents, you can even buy in more. And that's basically DCAing on the way down, right? But again, not many people will have the courage to do so because they probably already bought a bag at $2, planning to flip it to $2.50 to $3, maybe to $5, and now everything is not going according to plan, right? But you could go and DCA all the way down, and essentially when you yield farm, you can actually not put in fresh money and just use the yield, the fees that you have been earning in order to compound. It's going to have a cost, yeah, you'll have to harvest and deposit and confirm transactions, but Base is extremely cheap as a blockchain for you to do that in the long run. But again, here and there when the price rallies, you can still take profits. And actually, when the price rallies all that much, let's say here in this case it rallied 30-40%, this also brings a lot of volume. So these are the prime points for you to take profits, okay? The remaining of the time, you can just compound back in. And that's also why I think wide ranges are much better, because whenever you manage to zoom out, which is the case, and look at the overall chart performance, you can go ahead and then see, okay, there's some resistance here at 117, and then you see here, like there was this massive rally, well, not massive, but substantial rally. This is probably 50%, it's even higher, it's 70% rally, and you see that this pretty much confirms these resistances back here in January, February. There's this one 1.2 and this one at 1.35. So if you had been yield farming for all that period of time, you already looking at the chart can tell, okay, probably I'm gonna meet some resistance here at around 120 to 135, and actually that kept on happening. So that's the potential, guys. Compound on all the way down, and then you can already anticipate these price ranges for you to take profits. And again, it not only your LP position goes up in value massively after you compounded for all that long, so that means you can take a percentage of your liquidity out of the pool to de-risk. You are definitely on a profit at this point in time, let me tell you. Even if you got in December at $2, if you compounded enough on all the way down, and when the tides start to turn, you will definitely be at the profit right now. But also when you do see these rallies, notice the spikes here in volume. These days or weeks are when you generate the most amount of yield. So not only your LP positions do appreciate a ton, but also your LP position will generate a ton of yield in a short amount of time. And this also proves the point of compounding, because you want to have a bigger bag. You want to build your position to generate the most amount of yield at these very crucial moments. So entering in a pool right now, I wouldn't necessarily set a range down to 30 cents. I mean, we are in a bull run. I would set up a downside range of $1, maybe lower. I mean, I think lower it's even better, like 70, 80 cents is even better, because if the price does manage to go under $1, it's going to be a bargain to buy AERO, but that's just me thinking, okay? But in any case, let's go here with daily candles. So we see that all-time high of the token, $2.4. So you can set something like 3 on the upside and 1 on the downside. If you're not happy with the APR, adjust the ranges according to what you want also, but try to make it something that will work for you in the long run. Remember, the wider your range is, the more likely is that you can catch all of the price appreciation that you will experience in these rallies, all that volume, and also it gives you a lot more leeway to compound on the way down. Now let's look at the liquidity pools to farm AERO. Essentially, there are 3 DEXs that you want to farm it on. It's going to be Aerodrome itself, PancakeSwap, or Uniswap. Actually, on Uniswap, AERO USDC pool shows a really good volume to liquidity ratio. The same thing here with AERO ETH pool on PancakeSwap. I like PancakeSwap a lot because they have farms which allow you to de-risk automatically. You'll earn cake at the same time as long as you are in range, and that automatically allows you to de-risk, give you some exposure to other tokens outside of the token pair. Whenever I tell you about taking profits, it's also very important to know that it means de-risking. It means turning that yield into something else, and PancakeSwap already does that automatically because they will give you some of the yield in cake. So let's go here to PancakeSwap and search for AERO. There's already some farms popping up. Farm APR 32%, wrapped Ethereum with AERO. It has a really nice volume to TVL ratio. The volume is constantly higher than TVL here, which is really good. USDC AERO, this one has a higher farm APR, 32 versus 71 is pretty much the double, and I like this pool. I have been farming this here, although they do have a really good correlation because of the whole fact that Base is a Ethereum layer 2, so it's really well correlated AERO with Ethereum. So depending on what you prefer, you can have really nice farm yields here. And this is just a sample. At some point, I did a video a couple weeks ago where the APRs were just insane. It was probably close to 1,000, if not over 1,000%, with very tight ranges. I must say that. I know I've been talking about wide ranges, but I think a really good option is also, for example, open a liquidity pool position with a wide range, of course. So let's say we go open a position with something like this. I'm just doing some random stuff here just to give you an idea. As long as you are in range, you generate fees, and then you can zoom in a little bit more, and instead of compounding 100% of the fees that you are earning into this position, you can also do something different and start opening with that same yield more LP positions but with tighter ranges. So something, you look at the chart, right? You see, okay, where is the price chopping sideways for the most amount of time? So you can see here, $1 could be an interesting bottom, right? So something like this, and then we see there's some resistance here at 150. Okay, so I'm gonna go $1 to 150. So this would be a narrower range, and this didn't cost you anything because you open this LP position with the fees generated from the wider range position. There's a ton of different strategies that we can just create and apply with yield farming. That's also why I like it so much. So yeah, this is just an idea. And I know that I just told you about getting some exposure to other pools, but I think AERO is a solid token, so it doesn't really bother me all that much to increase my exposure to it. It does boil down to conviction, okay? So if you don't have enough conviction with it, find something that you have, that you don't mind holding, or that you might have been holding for the past few years, not earning yield, and try to do something like that with yield farming. So let's go on PancakeSwap and simulate how much we would yield in a pool with a bottom range of $1 up to 1.5. So we go back here. Let's say we want to go with this USDC AERO pool. We would click add liquidity. If you want to know how to do this step by step and have a full understanding of how these pools work, I just recently did a video on it. I will link it down below, and also at the end of this video I'll link it up on screen. So let's insert here minimum $1 and then maximum 1.5. Okay, so we are out of range because I need to switch this up. So let me reintroduce the price here, 1 and 1.5. Okay, so this would yield us in a year 57%, Farm APR 27%. But this is based on past performance, okay? So if suddenly there's a lot of momentum and volume on aerodromes pools, this can definitely 10x the APR here. And remember, you do want to catch all of these rallies. If you have a range that manages to get these upside rallies, all of it, it's going to print. We can see that right now, even with daily charts, there's less volatility in these markets. At some point, potentially, we can see what happened here back in the beginning of this year in March. So you see, there was this massive rally, huge opportunity to take profits, another one and another one. So this range would have granted us, at the very least, these two rallies, which are incredibly good opportunities to take profits. Plus you will see that the yield will be off the charts at these points in time. And one of the things that I really like also about wide ranges is that it gives us a more strategic look at the overall chart. So you see here that from this moment that the price started to go up from 50 cents all the way up to 90 cents, it was a good rally. Then it found support at 67, bounced back up to 96. So this was already hinting us that we could see a momentum shifting. So when the price fell down and found again the support here, which was a bit over the past one, it didn't take much for it to experience this rally. Then it found the resistance at 1.2. The chart right now looks much more solid. The support looks much more strong than it was back in the beginning of the year when there was these rallies, then huge corrections that left us with lower lows and lower tops every single time. And right now it's the exact opposite. When it rallies, it found support, then it bounces back up to rally. The next support is a bit above the previous one. So the price is definitely climbing slowly but steadily. And even the performance since it met this 1.5 resistance, it's, yes, the price is dipping, but it's not dipping all that much compared with these past examples, right? So this one hit 1.5, then it fell down to 115, smaller rally with resistance at 133, and now a lower low at around $1. But we're not seeing these massive red candles day after day. It's a much stronger support level right now, which makes me think that potentially we can see a good upside rally really soon. And also previous supports here are much more solid. This is much more solid, much stronger than back then, even in 2024 when it managed to go all the way up to over $2 per token. It was a much more volatile market back then. So I do think that we are at a point in time where potentially the price can go more up than down, but let's see how it goes. In any case, guys, these are my thoughts on Aero. Go farm it. I like PancakeSwap, but you can also find really good pools on Uniswap, or you might want to use Aerodrome itself. Even if you want to yield farm with narrow ranges, this is a solid token to do so. So if you go back here on PancakeSwap, let's work with a much narrower range. Let's go with 10%. So this is already triple digits at 10%, 5%. It's going to be much higher. So yeah, over 200% APR, which is still a good opportunity. Instead of going into random meme coins, you're going with a very strong asset. If it goes on the range on the downside, just hold it, and potentially there will be other opportunities when the price will go back up, starts generating fees again. If you want to go out, then you go out of the position. It's up to you. Liquidity pools are like this. We have full control over our assets. That's one of the things I like about yield farming. So guys, I hope you took value from the video. If you have any questions, let me know in the comments. I just recently did a video showing you all about resistance and support levels for complete beginners. I'll link that down below if you want to go check it out. Thank you for watching. If you have any questions, let me know in the comments. I'm going to wrap this one up. Take care. Keep exploring crypto. I'll see you on the next one.